Alright traders, I'm back again with another video, and I have finally got taken care of my video recording software, and it's working all well and everything is good. So the good thing is I'm going to be able to make videos on a daily basis now, so that's a good thing. But the bad thing is we missed out on so many trading opportunities this past week. I mean, there were so many things I wanted to show you guys and I just didn't get a chance to. So what I did was posted all that stuff on blogs, and now those trades are pretty much near the end, developing into other trades now. So we're going to talk about those other trades, and still the trades that I'm going to talk about are pairs that I wrote about and talked about. So starting off with the daily Euro US dollar, I want to show you a few things. Now I'm going to show you a different way to trade Ichimoku this time. We're going to be non-traditional, okay? We're not going with the traditional way. And a lot of Ichimoku chartists may complain and say things about the way we're doing this or the way that I'm showing you. But you have to do what works for you, and you have to find ways to make things work for you. And what's good for you and what's good for others is two different things. So if you like it and it works for you, you do it. Okay, so my thing is I see people talking about not changing the Ichimoku system, but then they add all these other indicators with it. Well, basically those indicators are colliding with the system. You may have another oscillator, three, four oscillators working, and they're telling you the same information as Ichimoku is already telling you, but you're getting conflicting signals, and then it confuses you. So then you're making bad trades. When you're confused, you make bad trades. That's one thing, that's for sure. Okay, so let's go on with this. On my chart, you may notice a few things. You may notice that there's no Chiku span, no Tenkan-sen, and no Kijun-sen. So those three things are off of this chart and not on the system that the way I'm gonna show you how to use the system now. And then you see this blue line here, and that is not the Tenkan-sen. That is not your Kijun-sen. That is your 100 period moving average. Okay. So basically, when I'm trading the system, usually I trade breakouts. I don't usually trade TK crossovers. But when I'm teaching the system, I'm going to teach you everything the traditional way. And once you know that traditional way inside out and you can explain it and you understand it, then we can get more non-traditional. Okay, so this is non-traditional, and everything that I've shown you before is all traditional things that are involved in this system. Okay, so now we have those three components not on the chart, but we have the 100 period moving average taking the place of those three components. Then you may notice that my Kumo cloud is different than your cloud. You may notice that my flat bottom is longer and my cloud is thicker. Well, the thing is, I changed the settings on Ichimoku system. Normally, your settings are going to be 9, 26, and 52. Okay, so those will be your settings. But I changed it. I doubled it until I made it 18. I made it 18, 52, and 104. So what that's going to do for you is a couple things. First of all, it's going to have more defined support and resistance levels. It's going to have your flat bottoms. You see them; they're a little longer than yours on your chart probably. My Kumo's a little thicker. But then the main thing is here, you're not going to have so many crossovers where Chiku span crosses. I mean, where Chiku span, where price crosses over the Kumo here. You see price cross the Kumo. Well, you may see it twice on another when it's regular, and some of those are false breakouts. So you're not getting as many false Kumo breakouts. Okay, you're still going to have false signals. Everything's not going to work all the time, but you just have to trade your plan. Trade your plan, stick with your plan, and just keep trading your plan. So it'll eliminate some things as far as a little bit of noise with your crossovers, as far as price crossing the Kumo, your breakouts rather, as far as price crossing the Kumo and having a breakout, and then it doesn't work for you. Now another thing is this 100 period moving average is going to tell you the momentum of the market. Now since this is a 100 period moving average, it's a little bit slower. You can put a 50 on there and see what the momentum is, but I don't suggest you do that. I suggest you do this, what I'm showing you, a 100 period moving average. We're going to know the momentum of the market just by the way this is pointing. Now you see it's pointing upwards, and you see that your Kumo is basically pointing upwards here, but then price tries to break through, And when price tries to break through there, it's not a good trade because the momentum is showing that it's to the upside still. But the momentum of price showed you here that it's a downward move, but we didn't catch all of this here. Okay, so we're near the end of the move, so price retraces. This is going to be a 50% retracement from here to here is 50% retracement. And you can see where it lines up with the Kumo cloud. That's going to show you your retracement level of 50%. And you can find that on every pullback that you do. You'll notice that. So price pulled back. So if you would have gotten to this breakout, to this Kumo breakout, you may have made a little bit, and then you would have got stopped out. But then price does a few things. It comes up and it bounces off the bottom of this Kumo. So that's a Kumo bounce, and you could have gotten into the trade there. And then price comes up, Kumo bounce. You could have gotten into the trade there. Price comes back again, Kumo bounce, gotten into the trade there. Price cannot break this resistance level of the Kumo. It's very strong right here. So 3 attempts and it failed, so it fell. When it fell all the way down, and now I'm expecting it to come here to this fractal level. So price moves from support and resistance to support and resistance. This is a support and resistance level, so this is a resistance level here. So price falls, needs to find another level to go to, goes to support. So it hasn't reached that level yet, but this is where we're looking for it to go to, this support level. Now price may attempt to come back and break that resistance level again, and we'll see what happens then. Now price may come down, hit off of our support level, and then go up and attempt to break that level, and we'll see what it does when it gets to that point. But I wouldn't look for anything long on this pair, unless it breaks this level here. And you can see I have this shaded in area here, and what I did is, this is your Kumo bottom and this is your Kumo top right here, a flat top and a long flat bottom right here. And this is going to be a strong resistance area. So I want to see price get above this area, and then I could start looking at long opportunities on this chart, on this pair here. So do you understand that right now so far? So about this trading this breakouts like I'm doing here, all we're trading is Kumo breakouts, Kumo bounces, fractal breaks, and fractal bounces. But I'm going to show you how to trade the Kumo breakout right now. This 100 period moving average is going to be your signal. Not your trigger, but your signal. It's going to signal to you that a trading opportunity is arising. Okay, because price is all above this 100 period moving average all this time. Then finally price comes down and breaks this 100 period moving average. Now you're going to say to yourself, okay, there's a trading opportunity in sight. So now price comes down and then it breaks the Kumo. That's your trigger. When it breaks the Kumo, boom, you go. So you want to see this as your alert signal and then your trigger. And then price came back up to your signal, bounced off the bottom of this Kumo and took off like we said. So every time you're going to look for a trade, if you're going to look for a trade, here we go. Price is breaking the 100 period moving average, then it broke the cloud. Definitely a good trade to get into, and you take that. Now the thing that I want you to start doing here is whenever you get into a trade, so if you get on a breakout, I want you to put your stop loss below that candle that closed. So this candle closed above the Kumo. Put your stop loss a little bit below that candle, because what I'm noticing and knowing from trying to do a lot of research just to try to get these stop losses as tight as I can is that usually when the market's going to go, it's going to go. It's not going to even revert back to this candle. It won't go back to this candle. Not saying it won't, but that's not what it usually does. What it usually will do will come back to this support level right here and then go. Okay, now here, if you put your stop loss here and you took this trade right here, you would have gotten here and made a little bit, but then price came back and it would have stopped you. Yeah, it would have stopped you out way over here if you stayed in that trade waiting. Okay, so just try to remember when you get a breakout, like this is a breakout here, you put your stop loss a little bit above that candle here. This one closed, so you put your stop loss above that candle there. So wherever it closes, you put your stop loss above it. Now this will be a long one because this is a long candle here. So you may not want to put it that deep. So what I'm trying to tell you to do is make your stop losses from the resistance or support level. Try to make it 20 pips farther. Okay, usually you can, if you get in exactly at the certain support and resistance level, you can make it 20 off the bat. But try to make it 20 from that level. So that's going to add whatever um, distance you had off of your candle. All right, let's go on to this is the euro dollar on a daily time frame. Let's go to the 4-hour time frame. And you can see some things a little more clear with this 4-hour time frame now. Okay, so I'm looking down here. If we were back here, price comes up. It signaled to me that a trade is arising because it broke the 100-period moving average, and then this candle closed above there. So I get into the trade right here. Now I don't have to put my stop loss way down here with this candle because what I can do is put it at the Kumo, just below the Kumo. You got a Kumo right here, and you can put it there. That's going to make it tighter. This is going to make it deep because this is a big candle, a lot of momentum, and the price took off. And this would have been a winning trade for you. And the thing to notice about these trades is, first of all, a lot of times breakouts, if it comes past the 100-period moving average and then gets to the cloud and breaks out, but the 100-period moving average is pointing 90 degrees or so, usually that trade seems like it's not going to go yet. It's a little early. And I'm going to show you an example of that because I'm in a trade now and it seems like it's a little early. But here we go. Price broke out here. Like I said, you can put your stop loss a little above that candle that broke out, and look what price did. It went right up to that candle. So that's a really tight stop loss because that candle is so small. So you could put it above this Kumo right here, and you can see this level right here is a little support area, minor support, minor resistance rather now. So you could put it up there, and then this trade would have been all right for you. You'd still been in the trade. And we're looking to ride that to the next level, these fractal levels. So here's the level that we would have looked at first. If we got into the trade, we want to make sure price breaks through here. So this is going to be a target level. It breaks that level, bounces and comes back, and then goes through that level. Here's a little level here. These flat bottoms are going to be your levels. Flat top, and then your fractal levels. So you look for those levels as areas where the market's going to make a change, or it's going to consolidate. Those are going to be strong levels for you to look at. Okay, so do you understand what I'm doing here? It's just the same thing I've been teaching you, just made a little changes for you to see, to make this a little stronger and clearer. Took off the Kijin-sen and the Tenkan-sen and the Chiku span, and we talked about breakouts. It's the same thing still. All right, so that's euro dollar for 4-hour time frame. Let's go to the euro CAD. Euro CAD on a daily time frame. Euro CAD, I don't really love trading it because it makes so many wicks. It's like a lot of long wicks, and it's hard to get your levels. But here you could see clearly a resistance level, clearly a support level right here. Okay, so you can still see these fractal levels. Now here's the next fractal level off of the daily time frame. So how do we get this trigger? Let me show you a couple things. Just looking at the daily time frame, if we were trading this chart here, price came down. It didn't really break that cloud, and it looks like we're not all the way ready because this 100-period moving average is still pointing upwards. We want to see it start rolling over, and now it's starting to roll over. So when it wasn't, what happened was it bounced here and then it started to come back up. Now price is waiting up for the 100-period moving average, and it waited for it, and finally it caught up, and now it has a breakout here. Now the way this pair moves, it's hard to just get anything real good off of it. You can see how it's doing. So it broke here and you want to look for this next level. So what I have here is this is going to be your fractal level on the 4 hour time frame. So when price breaks that level on the 4 hour time frame, we're going to go down to here. That's where we're going to shoot for our target. Let's see what the 100 period moving average looks like on the 4 hour time frame. Okay, so that's pointing downwards and we're good to go. Everything is good to trade on this. And like I told you again, you could see here's your signal and you got signaled, and look how the moving average is pointing upwards still. And then price breaks through this cloud. Now price broke through the cloud, but the moving average was starting to roll over. It was flat, so right here it could have, you could have said this would have been all right trade, but it wasn't. It came back and reverted back to there, and you would have got stopped out here. And then if you taken this trade, you'd have got stopped out there. But then we don't get into another trade with a breakout. We get in with a bounce, right? But then here's a breakout prior to the bounce, and if you would have gotten into the trade here, you'd have still been all right because the bounce only came to the Kumo bounce. So if you didn't get all this, you could get this bounce. Boom, price bounces. We want to get into the trade. We missed that. Here it goes again. It comes back, bounces right off that level again, and then it goes. Now price is here. We need price to break this fractal level in order for us to go short. And everything is telling us that this should be short because look how we're pointing downwards with the 100 period moving average. We're underneath the 100 period moving average and the Kumo. So there's no reason for us to think long trade on here. We want to wait for this to break this level, take it to here, and then see what it's going to do then. So that's something we've been doing. Let's go to the dollar CAD. Dollar CAD I'm going to trade right now, and I'll show you why I think I might have gotten in too early. Sometime you could have a very good trade setup, very good spot to enter the trade, but you could be a little early. In that case, you get stopped out and then you'll be trying to get into the trade again. Now looking here, this is the daily time frame. Price is above, well, we're on the edge of the Kumo right here. We were above the cloud, so we're pretty much bullish. You got the 100 period moving average pointing upwards and we're above that level. So we got to go to the 4 hour time frame to look at our trading opportunity. And here's what I meant when I say a little early. Here's the breakout, but the 100 period moving average is still pointing downwards like that. We broke out of here, but then here's what the price does. It comes back and then it breaks out again and then it comes back. This is still pointing downwards. We need this to start rolling over. Now I'm in the trade. I got in here when we broke the level, and my entry is right on this flat top. So I could put my stop loss depending on what I want to do. I can go 20 pips, or I can go to this level, or I can go to this 100 period moving average. Now I don't want to make it too long, so I would see what level is what. Now knowing one thing, let's go over a couple things that we've learned before, ways that you can identify areas for this market. From here to here is going to be the same length as from here to here. So you know that from here to here, if you pulled back to this 50% retracement level, then we know that price may move the same distance as this level. So if it does that, it's going to move right where it is, and I'll prove that to you. And I don't just show you on this chart. You could do this on any chart. Okay, looking at a Fibonacci expansion level, go here, go here, and we go there. Now we got to move this one down to the bottom of this wick, and that's where it is. And what does price do? From here to here, it retraces, and then it makes a 100% move of the prior move, so that it hits right on that area. And you can do that all the time. So when you get into a trade and you see that last leg, you can look at this leg and say, this could be an expected level for me to look at. Or you can know that maybe if price breaks this Kumo here, that this is a level where it may retrace, so you can decide if you want to get into that trade. And you see it hit that level, retrace back, and it's still trying to get out of this area here, this strong flat top right here, which is holding a little resistance for us. It was support, now it's resistance a little bit. Hopefully we can break that level and keep it as support, and then my trade will start going. So let's remove these off the chart, and then let me show you your Fibonacci retracements. Now here's where I was going to get into the trade, but what I did different, I did something a little bit different. When price went through here, came back, here's your retracement level, 50% retracement level right here, right on this cloud. I didn't do that, that's how it is. You're going to always see that flat top, 50% retracement level from this move to that move. Price came to that 50% retracement level, and you could see that level is holding as a support level right now. So what I did is put my stop loss below there. You could get in the on the 50% retracement level, put your stop loss a little below that level, so you can put it at the 0.618 level, which will be a little bit below this cloud, matter of fact, which will keep you safe, and that will be a level for you to put your stop loss. And then you see where price is now. But what I did, I took this level here, but I put my stop loss a little bit below this 50% retracement level, because I know that level's holding as support right now, and if price breaks that level, then maybe it's going to go downwards. My trade's no good. Now I may be a little early yet, because still, like I said, this isn't turned over yet, and price may sit around in this area, consolidate around here, and then go, waiting on this 100-period moving average. Okay, so that's that trade. That's how you do that. Let's go to pound dollar. Boy, this was so good the other day. I really wanted to make a video for this. I had it all set up just before the trade. You would have had a good trading opportunity, but I wasn't able to do it. But anyway, looking at how we trade this, you can see again, here's your signal. We got a signal here when price crossed this 100-period moving average. We got a trigger right here. Like I said, if you put your stop losses a little above that prior candle, you're going to be pretty safe. And if we did that, we're safe. We can even, this is such a small candle that we can even move this up farther. Okay, and depending on how far this, how much of a distance this Kumo is, you could put your stop loss up here. Okay, but no need to make a deep stop loss if you can keep it tight and still get a good trade. So just put it a little bit above that candle, and you would have been safe. No matter what the market was doing here, it didn't go above that candle. It came back and came right up to that candle. So you don't want to put it right on the end of that wick. You want to be a little bit higher. Maybe you can go 10 pips higher if you want to. And then we bounced here again, and then we took off. So you got your signal and then your trigger. Now this is the daily time frame, so you do that on your time frame. If I'm trading a 4-hour time frame, that's the time frame I do that. I'm looking at this to get support and resistance levels, and to get a bias of the overall market. And you can see things clearer with a daily time frame. It tells you a lot more than a 4-hour time frame or an hour time frame. Now you can see where price, this is going to also be a 50% retracement level right here, and I'll show you again. This is a different chart. 50% retracement is going to be right at that that messed up, but here we go. Let's bring that right here, and put this move right there. From here to there, 50% retracement. Sure enough, right there, you see that 50% retracement. The market came back right to the flat top, 50% retracement, and it bounced on that level. Okay, so this level is going to be a strong level for you when price goes upwards. When price starts moving up, that's going to be a level that you make sure you break before you get into the trade. Okay, but right now we're trading short because price is underneath the 100-period moving average and underneath the cloud. So we're looking for shorting opportunities. Price bounced off of that 50% retracement level and came right back outside of the cloud. Okay, so let's go to the 4-hour time frame. And here's that 50% retracement level up here. You can see what price did all up there, bouncing all over the place on the 4 hour time frame. But now if we're trading our breakouts like I told you, now you can see this is starting to roll over. Price broke out of here. It's still kind of upwards, but it's starting to roll over. So what it did, retraced. This was rolling over a little bit more, and then it took off. So you got your signal here, and then you got your trigger, and then you put your stop loss above that candle. If that candle's too deep for you, then you can do 20 pips from the support and resistance area. So this is the support level. You want to be 20 pips from that. Okay, and so look what price does. It bounces off the bottom of the Kumo, so that's another Kumo bounce. After the break, a bounce. So you have a break and then a bounce. Got the break and then the bounce. What does price do? Goes down, makes a fractal level, goes back up, comes all the way up close to that fractal level here. Goes down, makes a fractal level, support and resistance level, consolidation, goes back up just above this fractal level, and that's where price is, above this fractal level here. Now where I'm going to get into this trade, and this is where you guys can look at it also, this fractal level right here. If we break this level, then we're looking to go shorter, and it looks like this is setting up early because this is still rolling over. Now price may continue upwards and break out of the cloud here, but then remember this 50% retracement level, which is on the daily time frame. When you look at that, this is a strong support and resistance level. So this level here will be a strong resistance level for you when price starts to go upwards and you get into a long trade. Make sure you're aware of that level, and make sure you break that level really before you get into a trade. Now if price breaks the Kumo down here, then you know that your target level is going to be up here. So if you got a Kumo breakout over here somewhere to the upside, make sure that you look at this level. Alright, traders, that's it right now. I'm going to keep coming at you with some videos. Hopefully I'm helping somebody. This is a long video here, 27 minutes already, but I don't care how long it is. I'll stay on here and show you whatever I have to show you. If it takes me an hour or whatever, I don't mind doing this. So traders, hopefully I'm helping you guys. Hopefully you're learning stuff. If you have any questions about this other way that I'm trading, the non-traditional way of trading the Kumo breakout, just let me know. We're going to get more entailed with that. The next time I come back, I probably won't show trades that are developing. I'm going to just show you exactly how to get into the trade this way. But basically it's the same way that we've been doing. Kumo breakouts normal. We just remove some elements, we change some settings, and we have the 100 period moving average on there. Alright, so it's still the same thing as everything that we've been taught. Alright, well traders, that's it. I'm done for today. I'm done for now. Be back at you again. Until then traders, have a great and blessed trading day, and God bless you.